So our final presentation of the conference comes from Addison Snell, who is probably a couple cups of coffee in like myself, since we're here on the West Coast. Addison, how are you today?
Doing fine. Thanks, Brian. Glad to be here with everybody. My name is Addison Snell. I'm with Intersect 360 Research and happy to give an HPC and AI market update here. I'm sorry that I'm not in person in Lugano. It's always one of my favorite destinations of the year. Talking today about the new scalability. This is a slight update on my previous presentations at the HPC Advisory Council. And what we're really seeing is different definitions of performance as they start affecting different definitions of scalability as they start to affect high performance computing environments. And I'll get to that in the end of the charts. I wish I could give an updated forecast. This is always the conference every year where we're right on the cusp of releasing a new market model and forecast to our clients. We haven't quite finished up the calendar year 2020 and revised forecast out through 2025 yet. We have gathered a lot of the data for it. I can give a qualitative view of what it looks like from our last forecast and what we think might change. It's a little more complicated this year than it's been in previous years because we're doing this as having come through a pandemic, which certainly had a major effect on the high performance computing industry. First big change for us, introducing Dan Olds as our new Chief Research Officer. He's not here for this conference, but many of you are already familiar with Dan and his work in the HPC industry. He's been an HPC analyst for quite a long time, including most recently for Orion X, has previous roles at IBM, Sun, Sequent. And a big thing that I'm really happy with is that, for as long as I've been in this industry, we've talked about the need for development of talent for people coming into the industry. Dan is someone who's been doing something about that as one of the primary coordinators of student cluster competitions. And in fact, he's just been doing that in his Winter Classic student cluster competition over the last couple of days. That will be ongoing in his new role as Chief Research Officer, taking the title previously held by our co-founder, Chris Willard, who's still my business partner, even as he's in retirement. So absolutely thrilled to have Dan on the team, and you'll be seeing him, his name on research and seeing him in future webinars and conferences going forward. As I was starting to say, COVID-19, of course, has had a huge impact on high performance computing, and that's been bidirectional. We've seen a huge influence of supercomputing combating COVID-19, with only a few here on the slide of the efforts that have gone into supercomputing resources going to COVID-19. If you have a chance, take a look at that HPC Wire article, top front and center, the history of supercomputing versus COVID-19. The editorial team there at Tabor Communications did an excellent job putting together a timeline of what the HPC industry has done relative to developments in COVID-19 through the pandemic. I believe they've been continuing to add to that as well. We've covered it in our podcast this week in HPC, including going back to some of the earliest outbreaks. I did an interview together with Cinecca, Carlo Cavazzoni, who's a quantum chemist at Cinecca, where they were right at the heart of one of the original outbreaks in Europe, and here we were in Silicon Valley in one of the original hotspots of the United States. So it was a fun conversation going back to the early part of the pandemic. Meanwhile, COVID-19 certainly had a huge impact on the HPC industry as well. Sorry, I want to, of course, talk about Fugaku, which was the biggest achievement over the last year, which released early in order to combat COVID-19. It's interesting in that Riken has had a history now of coming out with major supercomputers. Not only that, but coming out with them early amid major catastrophes. The K supercomputer managed to launch early and get into production when they were right in the middle of dealing with their tsunami post an earthquake and the major flooding there. I put a couple of other things on there. It's very notable that they have the Fujitsu A64FX ARM chips in that, kind of spearheading a look at ARM and their role in supercomputing going forward. So certainly a lot of eyes on Fugaku with this major achievement. Now I said we'd talk about the forecast and the fact that COVID-19 certainly had an effect. Overall, HPC is a healthy market and will continue to be a healthy market going forward for the fundamental reason that we don't run out of science to do. There are always more problems to solve, and therefore we're going to continue to need computing to do so. There are other factors such as AI and machine learning that continue to bolster the market and have a major effect there as well. Cloud is the biggest contributor from a product and services perspective, and regardless of COVID, was growing in our forecast at over 20% compound annual growth rate. In the near term, COVID is a major accelerator of that because cloud is something that does very well with uncertainty. So to the extent that people were constraining their on-premises acquisitions in order to postpone or deal with uncertainty, cloud picks up a lot of that slack, and we were forecasting major growth for cloud in 2020 over and above that double-digit compound annual growth rate that we already talked about. Also in our forecast, we talked about what we were calling cloud-like environments, which weren't strictly public cloud spending direct to an Amazon, an Azure, a GCP that people were flagging as public cloud in their budgets, but were things that were associated like SaaS payments to a software vendor or facility outsourcing or co-location or things that were on premises but managed like clouds. All of these things were sort of cloud-like spending and are also having major growth. We edited our budget survey this year to look at that a little more directly and have evidence coming in that that was all correct. So the COVID-19 pandemic has a dramatic short-term effect on the HPC market last year, even this year, including some revenue that's lost. By 2024, 2025, we're back on the original growth rate path that we would have seen without an effect on these compound annual growth rates. And in fact, when we come out with this new forecast in the next couple of weeks, and you'll see the big wiggle in the market due to COVID-19. I've been talking to Dan about our forecast, and what we think we'll do for clarity is continue to base the compound annual growth rates out to 2025 on a 2019 pre-pandemic base rather than a 2020 base, which would make the market look weird. And here's what I mean by that. And hopefully many of you have seen this chart already, but just to go over it quickly, what we see in a pandemic is that, or I should say in any recession, it doesn't have to be a pandemic, anything that causes an economic recession in HPC, because we're dealing with things that have long sales cycles and long replacement cycles, you tend to use your cluster for 3, 4, 5 years. The people who buy in 1 year are different than the people who buy in the next year. So when you see delays to procurements, most of those delays come back in the following year. So most of the dip that you get in the short term is from things that are delayed, not canceled, and it causes a bump in the next year when the sales cycles come back in. Then you get a little bit of a wiggle effect the next 2 years due to sales cycles, budget cycles, and then by year 5, you get back on the line. There is some lost revenue where some projects do get canceled, and that's to say that the dips in years 1 and 3 here after the recession for the baseline on year 0, the dips in years 1 and 3 are deeper than the peaks are in years 2 and 4. So there's some lost revenue, and we have a lot of end user budget data that's going to help us map that out. And we've seen this before. This is what the market looked like in HPC after the recession in 2009, which is not exactly this previous picture, but it's darn close and gives you the idea of what's going on. And I think the COVID-19 pandemic is having a bigger effect in HPC than what we would have seen here. And then you get that artificially high, very high growth rate from, in this case, 2009 to 2010. But what that really is a lot of catch-up sales from 2009. We wouldn't really say we're expecting 35% growth in the market. It's going to be better to look at what's the long-term CAGR based on the year prior to the recession, and that's what we'll do here. So for the market forecast for COVID-19, we were forecasting that the worldwide HPC market would fall 10% below the baseline forecast for 2020. That does not mean a 10% loss from 2019, because we were forecasting growth, right? What we're talking about here is there's an original blue bar. That's the original forecast. Then we're going to come 10% below that blue bar to hit the orange line, which in this case is a 3% year over year decline, nullifying the previously forecasting growth. And this would be the first year of HPC market decline since 2009. That's $4.2 billion below the baseline forecast. But of course, that's not all loss. Most of that comes back this year and puts us above the baseline forecast in 2021. Then we have a little bit of those echo effects in 2022, 2023 before it gets back to normal in 2024. There is a total $1.2 billion revenue loss over the course of the 5-year forecast, which is over the total market spread over that many years is not that huge, but it is certainly measurable. Now, we've said all along, this is a slide that we put out last July, that this has significant forecast risk, mostly related due to how long does COVID-19 last as an economic damper. I would certainly say that here we are in March, 9 months later since July, and COVID-19 has continued as an economic effect beyond what we would have forecast even last July. We do see signs of recovery in 2021. How quickly that recovers will have a lot to do with where we put that rebound, and that it will include significant industries like manufacturing for how much are people driving and buying new cars, how much are people flying, and what does that mean for the airlines? What does that mean for the energy sector and oil and gas, which has been really depressed for the last couple of years? Those are some of the industries that are down. Pharmaceuticals and other biosciences have been up, and we modeled that in the vertical market forecast, and we're continuing to see that do better than we expected. So we said we have a lot of end user data on this. We've asked end users, has COVID-19 affected your HPC operations? 40% say yes. 33% say COVID-19 has affected the HPC budget. And when we look at what that effect is in terms of the total spending, there's certainly more down than up. Of the 33% that had COVID impact the HPC budgets, 69% are reporting reductions, while 28% are reporting increases. And we're also looking at the procurement cycles. Have you canceled a purchase? Have you delayed a purchase? Have you accelerated a purchase? Has it created a new project that you wouldn't have had before? All of this is data that we look at by economic sector, in some cases by vertical market. We compare the budget sizes, and this data is informing our 2020 market model and revised 2021 to 2025 forecast. We have new budget cycle data that's come in that looks at all of these things, in addition to our normal budget data on how much is spent on hardware, how much is spent on software, staffing, facilities, services, cloud computing, including new definitions on some of these cloud-like areas like cloud enablement services, SaaS, co-location. So we're looking at a lot of those cloud-like areas with more definition. If you saw our previous webinar on this, you saw how we saw spikes in certain categories that were falling in other, software, other, services, other. And that's the methodology working, right? That's tracking a new trend and it's showing up and we're catching it, double clicking on those others, finding where to add more definition. And now we've absorbed those other spending categories into something that's more defined. And it shows that our previous analysis was correct on this. So this is all going into the new forecast. This is what I was talking about with the vertical market forecast. This is still our previous forecast based on 2019 actuals. 2020 is still a forecast here, I would say. And we looked at this by vertical market. You can see some of the hardest hit vertical markets there in the lighter color. That's the lighter color bullet points are the previous forecast. Already looking at energy, retail, large product manufacturing, like the automotive and aerospace, that are the big areas that are the hardest hit. Based on the newest data, we think this is really pretty accurate. We have not had the need to come out early and say, no, this was way wrong, because there are some areas that have done better than we expected, but also some areas that we think have done worse than we expected. And we'll just catch that when we really finish up the total market model. I will say biosciences overall, probably better than we had originally forecasted to be. There were more projects, more spending for longer going into pharmaceuticals, genomics, other commercial biosciences areas. Other than that, though, academia probably worse than forecast. Although there were certainly a lot of academic research and activity around COVID-19, a lot of that came on granted supercomputing cycles that money wasn't spent on, or it was a reallocation of resources that already existed. And the big thing that happened that changed based on this forecast was, by the time we went to September, October, a lot of students weren't returning to campus, and we saw a lot of economic effect in the academic segment of the industry where spending was curtailed in the later half of the year, with projects that were delayed or canceled in academia heavier than in other segments. So it will come back, but academia probably did worse on HPC spending than we had forecast it would last July. So all that will come out with more exact numbers, I think, prior to ISC, and you might see a webinar from us around the ISC timeframe with a new market model and forecast out through 2025, still using 2019 as the base for long-term compound annual growth rates, so that we don't get distracted by the dip in 2020, which is essentially artificial. Our newest technology survey that we presented a full webinar on looked at a lot of other different areas of major change. One is liquid cooling, which we've been getting a lot of questions on, and now built specific questions into our technology surveys. We've seen liquid cooling showing up in more than 40% of HPC sites, with it widespread 16% of the time. And we're projecting further growth in liquid cooling in HPC data centers, particularly with more centers going back to full liquid cooling plumbing. A lot were done in the short term with just door chillers. And if you already had the plumbing for liquid cooling, great, you were doing it. But now we're seeing more data centers that are actually gearing up for liquid cooling in the long term, putting plumbing in, and we think fully plumbed racks in the medium term will overtake door chillers as the most common form of liquid cooling in high performance computing data centers. Cluster interconnects, I hadn't mentioned anywhere else, but we continue to see InfiniBand as the primary choice for high-speed interconnects, with Ethernet being preferred for lower speed interconnects. But mostly the story is Ethernet and InfiniBand continue to split the market. We wanted to get a data point in there on OmniPath because of the spin out of Cornelis Networks from Intel. We wanted to get a sense of how much base there is to build on, and there's certainly something there. In addition to what we're seeing here, we also measured the high-end proprietary system interconnects like Slingshot, the Cray Slingshot under HPE now, Tofu from Fujitsu, BXI from Atos, and we've got data on all of those that we give to our clients. But really, if you're not on one of the proprietary ones, it's mostly Ethernet versus InfiniBand, like it's been for the past several years. The question will be whether OmniPath has a chance for growth with an independent vendor on it right now, and we'll continue to monitor that. This is a really fun one, looking at CPU and GPU combinations. And it's the second time in short succession that we surveyed something like this, because we also touched this in our 2020 HPC user rating survey. Looking at CPUs in general, GPUs in general, FPGAs in general, which are the top three bars on this list. People love GPU accelerators in this space. And of course, people also like CPU systems in this space. But it's when you start looking at the combinations of these things that it really gets interesting. Now, these are just general impressions. We have a lot more targeted things like technical impressions, operational impressions, penetration data for all of these things. But just looking at what are your forward-looking impressions of all of these, what the market is consistently saying they want is x86 CPUs, whether it's Xeon or AMD, an x86 CPU together with an Nvidia GPU. That's what has the most entrenchment in the market. But notice that that's not really the way the market is going right now, because AMD already has its own GPU and will soon have them on integrated packaging going into the Frontier supercomputer, among other places. Intel is developing its own GPU accelerator, the Intel Xe HPC accelerator, and it will go into the Argonne A21 system. So we'll see those very soon as well. And then Nvidia is in the process of acquiring ARM and has announced its own Project Grace for the future with its ARM CPUs. We can presume that Nvidia might have in its roadmap the idea of integrated ARM plus Nvidia GPUs. So if we start looking forward to, well, what if mix and match isn't the way this goes, and you don't have the x86 from Intel or AMD together with the Nvidia GPU because we go toward integrated packaging, what do all those different combinations look like in terms of forward-looking impressions? Now, you can start cutting them up and saying, all right, well, the thing that has the highest among those is the ARM CPUs with the Nvidia GPUs, followed very closely by AMD with AMD, and then behind that, the all Intel environment. But I think you're cutting it too fine, because a lot of these are future products right now. And really, you're talking about a range of 20 to 28% favorability on all of those. And I guess maybe there's some concern about the unfavorability or the unimpressed on the Intel side, where you've got 24 24% saying not impressed on the Intel Xeon with Intel Xe, but it's not out yet. I think the big thing is that it takes a big step down from the things that are available now. And what we're looking at is a real transition point for the industry to look at these different combinations, and a lot of trial right now. The software ecosystems right now are mostly around x86 and CUDA. And the ARM software ecosystem isn't as developed, and the other GPU ecosystems aren't as developed. So these wars get fought in software, and it'll be interesting to see how this market continues to develop, not just in this current generation that's out there, but I think for what it means for the generation after that. When we get to 2023, 2024, this market could start looking really differently. We've been seeing an increase on-node storage, particularly with flash and SSDs in the market. More flash coming in with storage arrays, although hard drives are still the primary choice, because we talk about a lot of data out there, and economically that winds up being on hard disks most of the time, and that's worth talking about. Parallel file systems, Lustre, GPFS are still the two that are the broadest used. The commercial HPC market still lags the public sector in parallel file system adoption. We also surveyed PANFS, Ceph, BGFS, Weka. Those are all in there, but they're well behind Lustre and GPFS. And of course, public cloud usage, we still see growing. And I'm circling back around to that point that I was making at the top of the presentation, that the cloud is a major growth area, both in, this is direct public cloud usage, does not include some of these cloud-like spending areas that I was talking about before, but 2/3 of the market making at least some use of cloud. But usually that's a small usage of cloud. It's less than 10% or less than 1/3 of overall workloads getting done in cloud. And then when you get up to some of these that are doing 2/3 or everything in the cloud, well, those are smaller users that don't have their much of any of their own infrastructure. So when you see 90+% of HPC being done in the cloud, that's not like you've replaced some HPC infrastructure. That at the margin are your newer HPC users or smaller HPC users that are really doing cloud instead of on premises. So this brings me around to a final big chart in terms of new definitions of scalability. And I wrote recently an editorial in HPC Wire on this very topic. You can either scroll down or find it, or just Google for this article and my name in HPC Wire. You'll probably find it. That HPC, we're used to talking about scalability. We always talked about scalability, but notwithstanding a couple of arguments about scale up versus scale out over the last 20 years, mostly scalability has meant biggest. Would give us more cores, more flops, more bandwidth, more bytes. Scalability is a little more subtle than that now because of these industry dynamics with disaggregation and mixed workloads, heterogeneous processing. If we really look at some of the gross levels, rolling these things up at the site level, among HPC environments that we are surveying, 80% are running machine learning today or working to implement it within a year. It's over 60%, close to 70% already have it, and we're going to be at 80% very soon because people say they're working on implementing it now. So there's new workloads as part of the environment. A lot of that is driving mixed processor types like we were already talking about. 91% already have accelerators as some part of the computing environment. Note that I'm not saying that means a 91% attach rate for GPUs. It's much lower than that. But I'm saying if I go through your HPC environment, do you have accelerators in there somewhere? 91% of the time, the answer is yes. And so therefore, you're dealing at some level within your site about how do you deal with heterogeneous computing. And most of that is GPUs. Some of it is are FPGAs or other choices, but it's mostly NVIDIA GPUs. And then, like I was just saying on the previous chart, 66% have workloads that are both on-premise and in the cloud. So that's another notion of how do I scale across these different locales? How do I manage data sovereignty? How do I manage data control or scalability across availability zones? All of those things get in play with cloud. So when we talk about scalability now, I think there's not just biggest, but are you scaling across different types of elements? Are you scaling across different types of workloads? Are you scaling on-premise and in the cloud? And those are things that are different than biggest, but I think are new notions of scalability that are perhaps even more relevant to a wider swath of users in the market today. And then we can get into other discussions like protocols and network fabrics, though all of those things. But just to put it on 3 pie charts here, that's how we're seeing a lot of this playing out in HPC today. You can see our previous webinars from our website with registration, intersect360.com/presentations. We'll probably have another one soon coming up in next month around the ISC timeframe. So you can get on our newsletters to get alerted from that. The annual HPC budget survey is actually now in, and we've analyzed that data. We're building it into our forecast, which hopefully we'll be releasing to clients by the end of this month, although it's a little bit complicated remodeling it all for the COVID-19 effects. So do sign up for that newsletter if you want updates from us, or keep watching this space for new updates from us. And of course, I'm always happy to present with the HPC Advisory Council, and I hope to see you in Lugano in person next year. Thanks very much. Happy to take questions.
Thanks as always, Addison. We do have one question from Martin, who asks, how would an Nvidia acquisition of ARM affect competition?
How would an Nvidia acquisition of ARM affect competition? Well, I think that, first of all, I think it's likely at this point. I'll give 2 answers. One is the effect that I was already talking about with the integrated CPU GPU packages. I think going forward, we're likely maybe by the end of 5 years from now to see integrated packages from Nvidia, from Intel, and from AMD that then start communicating better within the integrated package than they do outside of it. And that will drive the market to all Intel, all AMD, or all Nvidia deployments. And you'll see less of x86 plus Nvidia GPU. And I think a lot of that preference will come down to software. What's more important, to stay within your x86 middleware environment or to stay within CUDA? That's going to be the nature of competition going forward. I think the more subtle and important thing to look at is to what extent is Nvidia operating as a server vendor in this market. They're not really a server vendor right now, but they are defining configurations with DGX and SuperPod that are resold by other people. But when we looked at server vendors in the market, we threw Nvidia into the mix now just to get a sense of, from end user perception, who thinks of Nvidia as their server vendor. And Nvidia scores quite well in that, or well is a value judgment, scores quite high in that. Nvidia might not want to be seen as a server vendor right now, but increasingly they are seen as a server vendor. And that's an interesting competitive dynamic, because you can say it's good for Nvidia because they're controlling more of the configuration, capturing more of the value chain, but it's also sometimes dangerous to compete with your own customers. If you're at HPE or Dell or Lenovo or Atos, do you like it that people are viewing Nvidia as the server vendor and you're more or less fulfillment? That's going to be a fascinating competitive dynamic over the next couple of years, especially as Nvidia controls more of the value chain with CPU, GPU, interconnect, et cetera. So that's how it will affect competition. Thanks.
Okay, I'll pass it on to the panelists, Hussein or Gilad, if you have any questions for Addison.
I have one question. Addison, it's good to see you actually. And pity that we did not have the chance to meet in Lugano.
I know.
So, thinking a little bit about the coronavirus, and do you think that is the COVID? Do you think that we are at the end of the effect of the COVID in the market, similar to what we have seen during the mining period of time? We had like a period of time where mining was, company like Nvidia was affected a lot by the mining and other vendors, and then that slowed down. So do you see that as a comparison, could be a valid comparison between what's happening?
Well, anything that causes a short-term change in the market is a valid comparison. Do I think we're at the end of the economic effect of COVID? Gosh, I hope so. Do I really think we're at the end of it? No, there's going to be some lingering ongoing. I mean, look at what's going on in India right now. And, that's a major geography, and it still continues to have an effect. The primary answer is I'm not that kind of analyst. I don't have a good view on the long-term pandemic spread. What we're talking about in our forecast is the economic effect as it applies to our vertical markets, and we have to forecast that as best we can based on the information that we currently have. I'm actually really proud of the forecast that we put out. Originally in March, we came out with a pre-announcement of, hey, we've got to change the forecast based on COVID-19, and here's the change in the forecast. Then we came out with a specified forecast in June, July. And that I think has largely held up. I think we did an excellent job modeling that with the data we had, and the demand side data coming in about budgets is really supporting the extra work that we did on that a year ago. So Dan and I still have to really work it out for this year based on the newest data we have. And the biggest thing is we're going to be looking for what vertical markets do we think might be delayed in comebacks on spending by the end of this year. I would say the number one that we're going to have to look at is energy with oil and gas. And what do we think is going to happen with the price of oil by the end of the year? And what effect will that have on HPC spending, which tends to follow the price of oil in the long term? It doesn't go to zero, by the way, just when the price of oil is down, but it's less. So that's the work that we're going to be doing over the next couple of weeks. Thanks.
Thank you.
Yeah, I have. If Hussein asking one question, I need to ask two. It's that's the rule. So then he can come back and ask more. So first, congratulations on Dan Olds on the addition to Intersect 360.
Really happy about it. Thanks.
And really appreciate you presenting this data today. I think it's very interesting. So two questions. I'll start with the first one, and then we can go to the second. Hussein asked about the impact of COVID-19. I think he probably was looking from a economics perspective, but there are other effects of COVID-19. For example,
quite a lot of effects
right.
So economics. Yes, unfortunately. I mean, I'm laughing. It's a tragedy. It's been horrible. And I don't want to forget that. This has been a horrible tragedy for a lot of people.
Yeah, no, I'm trying not to go that path, but I'm focusing on the technology side of things. So beside of economics, people move to work from home. And as you work from home, the requirements or elements needed in data centers start to change, right? And that's not something that's going to go back after COVID-19. And I mentioned one thing regarding that, which is security. Security started to become a more interesting and more important part in supercomputing. And we saw last year that in Europe, there were numerous supercomputers that were hijacked to run the wrong applications and needed to take down. So suddenly security becomes a hot topic. And that will not change. The question here, how do you see first security become important? And I'm not sure that I saw too much of questions around security and how security requirement will change administrations or purchasing or technologies. And beyond of security, do you see anything else from technology that's going to be changed or becomes more important because of COVID-19?
Well, so I'll start with security. Security has been something that we've talked about at an increasing level at HPC over the last 10 years. It seems to get to be a more important topic every year, and that's regardless of COVID-19. And I think the pandemic did accelerate that. I think for as much as people worried about security with cloud computing and giving up their own data, individual hacks like this have now started to flip that conversation, where cloud companies are starting to say, look, your data is more secure with us than it is in your own data center. And a lot of times they have a point. That's a pretty good argument to go make. And no, I'm not going to come down on either side of that, but I think it's an interesting or compelling discussion. I think a big thing that we are going to be discussing with regard to that, though, is this notion of data sovereignty. Who has control of the data? Where does the data live? Do I really want to have cloud native data in the long term? And if so, what are my long-term data ownership and egress rights? And don't talk to me about a 3-year SLA or even a 5-year SLA. If I want my company to still be in business 50 years from now, I need to know what my access to data is like 50. What did your data sovereignty? What was your data stewardship plan 50 years ago? Right? What do you think it's going to be 50 years from now? And if you have a 5-year SLA, is that adequate? And I think that's going to be a real discussion for cloud computing as it continues to become a greater part of these environments. That's a big area that I think we're going to talk about in terms of data scalability. It's going to be across on-premise cloud. And by the way, I've been talking about a lot of the core stuff, core and cloud, but there's edge too. We don't talk about edge as much in the HPC side, but it's a huge part of the AI side. And looking at data sovereignty, edge to core to cloud, I think that's going to be the other major topic that needs to be discussed here. You said you had 2 questions. That was one. It was one of 1A and 1B.
Yeah, I have another one, and I see that Daniel has a follow-up, but let me ask my second question first, which is a separate topic. We all know about the shortage in material in the market, right? And that's affect multiple areas. There is car manufacturers that have a great demand, but they cannot manufacture enough car because of shortage in material. Did you incorporate that element into the forecast? Because as it's seen, if there wouldn't be any shortage in material, the market might even jump much faster, right? So did you take that into consideration, or that would be another repo down the road?
So this forecast that I showed I haven't shown numbers based on the new forecast yet. We still have to work on that. And I appreciate you bringing up this topic, because I forgot to mention it. And I don't have any charts on it yet, but it is something we're concerned about, and I've had conversations with a couple of the suppliers. The question is really, what is that going to look like by Q4? By calendar Q4, is there some sort of delay in delivery capabilities out to the end user? And there are some vendors who are concerned about that. I don't know that we have enough data to really put a change to the forecast numbers based on that, versus an asterisk saying watch out, because if there's a delay in the supply side in Q4, it will push sales out even further. We have seen that before as well in the market, not with semiconductors, but with storage. If you go back into our numbers from, I think that was 2011, there was major flooding in Southeast Asia that disrupted the storage market. And that we saw that in our numbers, where it really got diminished, and then it came back when people could, the demand didn't go anywhere. It was the supply was gone. And that shows up in the actuals. It's hard to forecast things like floods. In this case, we're getting a signal that the semiconductor space could have shortages going forward. So we will talk to a lot of the major suppliers about whether that's something that we need to take into consideration for this year's forecast. I haven't seen that yet, but I do appreciate you bringing that up.
Thank you, Addison.
And you said there's one more question. Do I have to?
Yeah, there's a question from Daniel. I can read it out.
No, I got it.
Okay.
Not just security that's increasing, but also mistrust. Who's trying to get at our IP? Universities are leery about collaborations, et cetera. Well, yeah. I mean, the security a lot of times is actually a code word for fear. You can give people as many safety demonstrations about the airplane as you want, but someone who has a fear of flying, it just takes one news story about one plane crash somewhere for them to say, see, it's flying isn't safe. And well, here are the statistics that show that flying is safer than driving. I don't care. I'm scared of flying. And that's, that kind of fear is hard to overcome. Because you're dealing with something emotional, not something technical. And a technical argument doesn't beat an emotional feeling. It just doesn't. And I'm someone who's a big believer in consumer marketing analysis, even in business to business segments, because individual people make decisions, and you're still dealing with human emotions when you talk about making purchases. So I don't know where you want me to take that question, other than say, yep, bang on. That absolutely true. You get this mistrust. I'll take that maybe a step further, that this is nationalizing. Do not underestimate, everyone underestimates, I say do not underestimate, everyone underestimates the effect of hyperscale companies in this market. And that's a separate thing that we attempt to size outside of HPC, is just how much IT infrastructure do the hyperscale companies buy. And it's breathtaking. People consistently underestimate it. There are, I think, 11 companies that spent over $1 billion in IT infrastructure last year, over $1 billion with a B, right? A large-scale supercomputer costs on the order of $100 million. 11 companies spent 10 times that in infrastructure last year in hyperscale. 2 companies, I think, spent over $10 billion last year. So that's another order of magnitude above that. That's the equivalent of $100 million supercomputers every year going into an individual company. And this is now wrapped up in this is now geopolitical more than it's economic, right? It's rare in human history that you see that much power and influence concentrated into so few companies. Yeah, I don't think it's happened on this scale since the late Industrial Revolution. Historically, it doesn't last, but the United States, for example, would be hesitant to break up the American hyperscale companies and cede the AI race to Russia or China, and vice versa. So I don't think it's going to stop in the next 2 or 3 years. I think by the end of the decade, that might be unstable. And how does that play out? So that could be a whole separate discussion, and it's hard to forecast. Other than as an analyst, I would say keep watching it, because it doesn't last like this for that long.
I have a simple comment here about what Gilad maybe mentioned. I mean, you already during the presentation mentioned something about the zero trust. And actually, we are really starting this zero trust. We need to authenticate everything. We need to authorize everything. So we are living in it, and that's what's coming, not only to machine to human, human to machine, but also machine to machine. And we are going to see that growing more and more. So,
any new technology advancement brings on a new type of crime. And that's been true ever since computers were invented, and ever since, banks were invented. I mean, ever since currency was invented. Once you invented currency, you invented counterfeit and forgery, right? So, new technology brings new crime, and it takes time to get used to what the new crime looks like. Over time, you start to adjust to it.
Excellent. Thanks a lot. That was very, very, very helpful. I really enjoyed it.
Thank you.
Thank you, Addison. Always great to have you. All right, Gilad, Hussein, this is the end.
Yeah.
Any final words?
Yeah, so we said had to match, right? So it's now 2-2.
Exactly. I did it on purpose. Yeah, I will start saying one thing. At the beginning of, when we discussed the HPC advisory over Zoom, I was like, I was not sure if this is something that would like to do it or not. And then I had a meeting with Gilad, and he convinced me to make it shorter, and I believe that was wise, and I agreed with him, and we are here, and I believe that was an excellent choice. I really enjoyed it. I found it very helpful. I hope everybody find it helpful too. It was again good to see a lot of people. I mean, since like almost 2 years now, and beyond that, hope to see you here in Lugano next year. I mean, thanks a lot. It was great. Thanks to everybody who joined it. I have one only news. The interruption we had on Zoom. Actually, we had our support contact, thanks to Melania, that she did a lot of stuff for us in the background. In the back end, she verified that there was an interruption with Zoom in different countries. That's including the West Coast, New York, Washington, and some Asia and Indonesia and whatever. And that's what caused the problem. So it was not Gilad alone. It was also Zoom itself in different places in the world had interruption. Gilad?
Yeah, and I hope it was me that caused the interruption. Okay, it probably wasn't. So first, thank you. I want to thank CSCS, right? It's the collaboration. It's working together and doing those conferences and workshops every year. This year we did a short one, online and short one. It's 2 days, but it was half day and so forth. We do hope that we'll meet everyone here in person next year in Lugano. And I hope it's going to be a sunny week in Lugano. And we can go back and enjoy also the physical interaction and the place itself. I want to thank all the speakers. And if anyone has any comment, any idea of things that can be improved, a suggestion for other sessions, for other topics, we'll be very happy to hear. And you can easily email info@hpcadvisorycouncil.com anything that you would like to let us know. So with that, I also want to thank Brian and Sydney for the background work, and Brian for waking up early. And
helpful for him.
Yeah, exactly. And that's it. Thank you very much, guys, and hope to see you next year.
Thank you, everyone. This concludes the conference. And just as a reminder, all the presentations and videos will be available in the coming days. Just come to the HPC Advisory Council website or check out our YouTube channel. Thank you.
Bum, 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 bum.